What's going on, YouTube? Welcome to a new episode on trading, and in this one I am going to teach you how I made $0 this week. Just kidding, I'm not going to teach you how you guys can make absolutely nothing in one full week of work, but I will go over how this has been a very tough week for me and all the mistakes that I've made and why it's been so tough. Thank you everyone for joining me on this video, because this episode I'm going to show you guys why trading and the glamour that kind of comes with it a lot of times is masked by all these people making millions and millions of dollars and throwing around cash. But what they don't show is that trading is very, very difficult. It takes a lot of hard work, and it's not a normal 9 to 5 in the sense that you work your 40 hours, you get paid for 40 hours. You're gonna have weeks where you really struggle, as this week has proven for me, where you work all week doing as much as you possibly can to really come out with absolutely nothing to show forth. But before I get into that, as usual, I need my cup of joe.
Now close your eyes and just think about tasting it.
In honor of Valentine's Day, my Valentine got me a special cup, and I am wild for you. You are great. You're too cute. Just kidding. I don't really have a Valentine this year. Also this week, we are trying, which I'm assuming is a Fred Meyer chocolate Valentine cake. As you can see here, this looks absolutely delicious, and it is absolutely disgusting. The cream sucks, or the frosting, whatever. The chocolate is really nasty. The texture is weird. So overall, pretty much just as expected when you buy a cake from like Fred Meyer's or something. Anyway, the reason this week has been absolutely difficult for me was because of last week's trading, actually. And last week I had my best week yet. So last week I had a record of $736, I believe. This week I was down 19 bucks on the week. And even though losing $19 isn't really all that much, it's not life-changing, I don't need to go and get a loan and get out of debt or whatever, you know. In a normal like 9 to 5, or if you're a business owner, the harder you work, the more work you put in, usually the more money you can make, right? And that's not always the case with trading, because sometimes the more work you put in, the bigger losses you get and the bigger of a hole that you dig yourself into. And then at the end of the week, you really have nothing to show for it, or even a huge loss that you have to spend the next weeks or months trying to dig yourself out of. So that's why trading can be so difficult, because you're not guaranteed that for the 40 hours that you put in this week, you're gonna make X amount of dollars. So anyway, going into this week, I felt pretty confident, and I felt that I needed to be a little bit more aggressive than I usually do, so that I can try to match the same profits I made from last week and try to make the same amount or even beat them. And because my monthly goal for the month of February is $3,000, I really did need to make 750 bucks again, just to kind of get close or reach that goal. So because of that greed, my mindset was kind of skewed. I was way too confident, and basically I ended up taking trades that I shouldn't have taken. Trading is so counterintuitive like that, because people think that you need to put in more and more trades to make a lot of money, and that's not the case. Yes, you do need to put in a lot of work on the back end, such as studying your material, really knowing what you're trading, studying the market, a lot of screen time, doing all of the stats, and those things are probably one of the most important things. However, when it comes to actual trading, it's a lot easier if you can actually force yourself to stop over trading and be very patient. And the way to do that is to take less trades. In reality, it really is that way, because the more trades you take, the more times you risk of losing, and when those losses keep piling up, it just becomes a huge snowball that sometimes can be very difficult to kind of dig yourself out of that hole. So yeah, let's jump right in. All right, so here's my week, the 10th through the 14th of February. And as you can see, on Monday I had a $31 loss, Tuesday $72 win, Wednesday $185 loss, Thursday $50 win, and Friday $75 win. All that came out to $19 in losses. One thing I did want to mention is that because of kind of struggling this week, my win rate has actually kind of gone down. So generally I'm in between the 75-80% win rate, and for the month of February I've actually gone down to about 60% right here. So here's my trade on BNGO on Monday for a $31 loss. Here's is the daily chart for 3 months, and then here's the daily chart for a year. As you can see, I had this huge run here, I think back in October. This morning it had gapped up and then it failed, and I was trying to play this as my strategy. I call the gap and crap. Basically, I look for a stock that pre-market has a gap up and then it loses 50% more of its spike, and I look to enter into the bounce at the open. And so here's kind of what I was talking about on being way too early. This is a perfect example. As we look here, I got in so early, like this was like not even a bounce. I got in, I think 112.5, and my exit was at 112. So I got in here at 112 and it bounced to 122. And so I guess because there's actually a red candle here, I was thinking that it was topping out, so that's why I put in an entry here, and I put in half an entry thinking that, hey, if this goes up higher, I can get in close. I can put in my second position close to this pre-market high. And instead of doing that, I didn't add into this push into the second leg, which I really should have, because one, that was part of my plan, but I just kind of got scared of, hey, this could keep going past high, the pre-market high, and instead of adding, I just held. And that was really stupid because it topped out perfectly here and ended up failing. Because I didn't stick to my trade plan, I ended up not covering where I generally should have covered right here, which would have been down to this crack to I think 104. What ended up happening is I ended up holding, and then it ended up bouncing, consolidating, and moving back up, and I ended up covering an end of day into this little squeeze. Actually, I forgot about this, but I threw on my second half lower than my starter in the morning here at, I think it's probably like $1.10 or $1.11, because I was thinking, hey, if, this tops out, it's gonna pull back closer to $1 again. I have a bigger position now. I can make a little bit more, and if it doesn't, I'll stop out at my entry. And that's not the worst idea, because if it did fail, then I would have had a good position and I would have made a decent amount of money. However, it just didn't fail, so I ended up having to cut for pretty much a break even, and I lost on commissions pretty much for 31 bucks. But if I had stuck to my plan, and if I had added here into this $1.20 area, then my entry would have been probably like 117 average. And from 117 down to 104, that's a very solid 10% move, and that's what I generally look for. So I would have covered here, and if not, then I would have covered half, held, and then I would have covered my second half here, and I still would have made it a solid profit. But because I was just not in the right mindset this week, I didn't do that, so I was forced to take a small loss. Now on Tuesday, my trade was on GNPX, and I made $72 on it, and this isn't a trade I should have taken in the first place. As we look here on the daily chart for 3 months, it had this decent run back here, and then it pulled back, bounced very close to resistance, pulled back again. And generally when I see this gapping up again or moving close to this resistance again, when it does it for a third time, it's a very good sign that it's going to break out of this resistance and keep on going. That's a very solid daily breakout chart that a lot of people like to buy, and that typically works. Being so aggressive this week and being so greedy for money and really just trying to make profit, I made an impulsive decision to short into this resistance, which was a terrible idea, because just like I initially thought it would break out, it ended up breaking out. And as we can see here, it had this huge gap up in the morning. I shorted a little into the morning spike. I added when I thought this was about to crack. Now this is stupid. I hate shorting into weakness. I never do that. And the reason is because if you're shorting into weakness and then it bounces and never comes back down, well, now you're down money, right? And so I generally like shorting into strength, and again, made a super bad impulsive decision to throw in another position into weakness when I thought I was going to crack, and it never did, which was really dumb. So I ended up having a terrible average, and this kind of started going down. And when it started bouncing here, and then I saw this double bottom and higher lows, I knew that this was gonna grind back up and squeeze and break out eventually, and that's what happened. The only good thing I did on this trade was actually just covering my position. I was up more obviously if I covered here, but you know, you never know if this is gonna be the bottom or not, so I kind of waited for confirmation and then just got out here. But my entry was 159, my exit was 155, gain of 2.83%. Now on Wednesday I had a $185 loss. I took 2 trades and they were both on AIM. Again, this was really stupid of a trade, honestly. Like, this was a very similar setup to GMPX. The trade I took just the day before. Here's the daily chart for 3 months. It had an initial run, pulled back, bounced close to resistance, pulled back again, and then on the day I traded it, it actually broke out of, so the resistance was at like $1.38 or something, and it gapped up to almost $1.50. So it even broke out pre-market. Clear sign that this is a breakout, but ended up shorting in the middle of this spike when I should have, first of all, if I was shorting, I should have at least waited to get into closer to $1.50 when it was kind of topping out. This showed no signs of topping out here. This was just random because of off of this high in the pre-market. But regardless, clear breakout chart. This had a huge volume pre-market, so this was overcrowded, so I knew it was going to be super choppy. So I ended up taking half size here. So my entry was $1.49.5. So from $1.50 down to $1.30, you know, that's like 10%. So I was up $200-300. Instead of seeing this double bottom here and this higher low, especially here when this couldn't come back down, I ended up actually covering into the squeeze and losing money on that. And so actually a good thing that I did do though was I realized that, hey, this was a low float. The float is 5 million. It's already traded, at this point I think it already traded like 20-30 million shares. So huge volume. It fails in the morning and then it bounces and regains its momentum, and it starts squeezing, and that's when usually this thing takes off. And so I actually switched long. I ended up buying here at $1.50, and then it had these weird little spikes that all of them failed. Like, there's just too many sellers. $1.50, it spiked up to like $1.60, straight down, back down, and then kind of failed, went lower, regained, like spiked to 160 again on the minute, and then completely crapped on all the way back down. And so I ended up just stopping out here, and so 2 losses combined on one ticker, ended up for $185 loss. My short entry was $1.43, my exit was $1.47, so I lost 2.8% on that. My long in the afternoon entry was 149.5, exit was 144. Lost 3.68% on that. Okay, I can't find my Thursday trade on CPAH, but I will go over and kind of explain what happened. So we won't really get into the chart. I guess something happened with it. Anyway, I ended up having a $50 win on it, but I do remember clearly what happened. This was a good bounce short setup. Pre-market, it gapped up, and then so I got in. I think it took a little starter pre-market, and then I added into the open push. And what ended up happening is it actually failed. It came all the way down to like $3. So I was like, okay, hey, this is working. And went below $3, like, okay, so it is working. And then kind of randomly, out of nowhere, it had this huge squeeze. Just all of a sudden, huge squeeze came. And so I was up, at this point I was up like 10%, and squeezed all the way back up to where it came from. And so I just ended up stopping out for $50 win, even though I was up like $200-300. And at that point, you know, I'm trying to get better at cutting losses, because I've seen so many of these things where they squeeze back up after they hold support, and they end up, you know, squeezing the rest of the day and become a great long opportunity. And so just knowing that and seeing these things so many times, I just covered right before it hit my my entry. and which was kind of the right move because it squeezed another 10-15% or so further. It did end up failing later the rest of the day, but it'd be like that sometimes, you know. Now on Friday actually was a good trade. I was using my small account, so I didn't really make much, but it was nice though because it ended up giving me some kind of profit to go break even on the week. If it wasn't for this trade, I would have been down more than I was down, so can't complain about that. And it was actually a solid trade plan and it ended up working very well. It was on Blink, BLNK, and so if we look here at the daily chart, it had this run here. It wasn't on a lot of volume, but it was like 10 million volume, and it spiked to 340 on this day and then failed. This morning, here's the intraday chart. Here's pre-market. Ended up spiking to 311 pre-market. As soon as I saw this, basically I took half size at $3. I was gonna add into morning spike, into this $340 resistance. So I was gonna add another size and then risking 340, obviously. It just ended up failing here at $3, and I covered prematurely, but I did see some kind of bottoming here. It came all the way down to like 65 or something, bounced right back up, and then kind of grinded back down, then had some bottoming here. And so I was like, you know what, this week has been terrible with me covering. I should have taken profits when I didn't, so I ended up just taking all my profit here. This was a good trade. So basically my entry was at $3. Exit was right at 2.7, made 10%. The really important thing on this trade to understand, 10 million volume isn't very hard to break. So that's why I like trading something that has 20, 30, 40 and over volume. And that's a good resistance to play off of. But not really 10 million. But the reason I did end up entering is because pre-market had, I think, like 500,000 shares. And so when you do the math to find the volume it's going to trade on the day, that's going to be about 5-6 million in shares, depending on how it opens, how it kind of plays out. So could have been a little less, could have been a little more. But going off of pre-market, I knew that it was going to trade about 5 million, and the previous run was 10 million. So in this case, judging pre-market volume, I would say that this had 1-to-2 volume ratio, and that's good to short, because if pre-market had already traded 1 million or 2 million, that means it would probably trade 10, 15, 20 million on the day, which would break this volume here. And so this resistance would almost be meaningless. Could have gone either way at that point. Okay guys, thank you so much for watching my recap of this week. I really do hope that you learned something. Anyway, thank you guys so much. I want to see you guys next time. Peace.